Hey, so I want to go over the industrial sector. This is ticker symbol XLI, which is on the screen. So I did come across some news, and of course, as we go through this, if I um, mention something that you have a question about, feel free to leave a comment. Or if I didn't mention something, feel free to also add that in the comments just so we can all kind of be on the same page. Uh, So before we actually go into the news section, let's just take a moment to look at the last time we looked at the XLI sector. So it was about a month ago that we looked. May 31st was the date. At that point, we gave it like a fair value rating. That's why it's in blue. Here's like the little chart down here of what the colors mean. Green is good for buy. Red is probably not the best time. Blue is fair value. And then this purple, which you see one moment here. That shows that I bought something right around that date at close to this price. But sticking with XLI, so again, last time we looked at them, about a month ago, May 31st. At that point, it was trading for $96. We had buy points noted at 89 and 95. So clearly, 89 was probably the point that I wanted. 95 was reasonable. Ultimately, I didn't buy this one. Um, Resistance was at 102, or at least that's what we thought. It might kind of stall out there. And then we had notes here saying average yearly return of 6%. So that's another factor of why we don't necessarily put priority on this sector, is because it's such a low return. Me personally, I'm looking for things that I feel can get like 20, 25% annual return. But, if I found a good price for this, of course I would add it. We also noted it's in a 15-year long-term uptrend. Ranks 60%. Long-term uptrend ranks 60%. 2-year uptrend 40%. Okay, so there's multiple uptrends that we noticed on this last time we took a look. Um, the long-term uptrend we were saying is 60% of our allocation in terms of when I would invest in this one, and then a 2-year uptrend we gave 40%. And then we also noticed it was consolidating between 96 and 103. So I guess what I want to do before we look at the news is just take a glance at the technicals, and we'll circle back on this towards the end. But right off the bat, this one, it's reaching new all-time highs. Um, so not to get too far ahead, but chances are I'm going to say this one, I'm going to wait on this. Um, but I just wanted to see if I could find this 2-year point that I was referring to. Um, yeah, maybe I'll remove that. Unless I'm referring to this. Maybe I'm referring to this 2-year sideways consolidation. That makes sense. So I was given 40% to this sideways movement between 96 and 104, I guess, but 60% to the long-term uptrend, which it seems to now be falling into now. Well, let's go into the news, and then we'll try to make sense of this more as we go along. So again, XLI industrial sector. So one article I came across, of course, relating to the S&P 500. Analysts expect earnings to fall by 4.1 or 4.6% in the second quarter before growing again in third quarter, which would just see 2%, and then the fourth quarter being 9%. So it is expected to pick up this half of the year, second half of the year. After consumer discretionary, the strongest first quarter earnings growth is expected to come from the industrials at 12.6%. Profits from the industrial companies are forecast to rise around 11% this year, but the industrial sector has only risen by 0.6%. So that kind of gives us an idea that maybe this is a decent time to buy because they're expecting it to grow, 11%, but it's only grown less than 1%. So potential 10% growth in this one is ahead if we can catch it on the right time. I also want to point out the date of this article was April 10th, so about a couple months ago. We'll see if it's based on how it's kind of moved, especially over the past couple weeks. Maybe that 0.6 rise has changed to maybe like 3 or 4. Possibly we'll look into the numbers there. And then this was just a nice little chart that they gave us. Of course, we're looking at the second line item, and hopefully this is large enough to see, but right here, there's that 11% number that they were estimating for the full year's earnings per share. And then they also show the less than 1% return year to date. Again, this is in April, so it's been a couple months. Haven't seen any updates on this tracker yet, but if we do, of course, we'll share it. And then it's showing earnings per share through quarter one. So it actually showed 12% growth in quarter one. And I guess people didn't really capitalize on that, at least not yet. Something else that we came across, of course, the industrial sector has hit new all-time highs. So for this one, this author's saying it's a momentum stock. The fund just hit a 52-week high and is up 29% from its 52-week low of 82. And I think we saw that right now it's trading around like 107. So it's definitely gone up over the course of that year. Of course, we're going to look at it more into today, see if it's worth it now looking forward. And then just for some basics on this one, XLI, again, that's the industrial sector, and it has key holdings in machinery and aerospace and defense. Also charges this 40 basis points in annual fees. So as long as it grows properly, that shouldn't be an issue. Given the prospect, okay, so this is something that apparently for the industrial sector, what they're saying is as long as the federal government continues to raise rates or maintain high rates, the industrial sector tends to benefit from this hawkish stance of the Fed. And I'll kind of go into more detail of my thoughts on that and how, at least to me, that makes sense. And then here at the bottom, it shows that this Zacks rating system, which I'm sure you can find online, whether through Yahoo Finance or even just a Google search, they're saying it's a number 2. They feel like this is a buy with medium risk. They're suggesting that the outperformance could continue in the months ahead. Many spaces that make up the ETF also have a strong Zacks industry rank. So if we feel like this one's a buy, we would potentially dig into this and maybe pick out a couple individual companies that we think are winners also. And we'll go into that once we go back to the tracker, just to show you what the top stocks are for this ETF. And then it wraps up by saying definitely some promise for those who want to ride this surging ETF. So again, we'll kind of weigh the pros and cons here, break it down in the technicals pretty soon. The last slide we have here, these are like some things that I want to think about. And if anyone watching wants to kind of answer these on their own, maybe share it in the comments. Ideally, I'd like to circle back to some of these questions that I'm kind of asking myself here and just leave an answer in the comments. Hopefully I remember to do that. I tried to answer some of these questions as I see it today. And of course, these answers might change, but so some things to think about for the next time when we circle back to this is number one. So if the ETF increases when the Fed is hawkish on interest rates, aka how I'm seeing it is the government's lessening the money for the public, which means more money for the government. The government, so the question is, how much of the industry is across borders. So that's one thing, because um, if there's less money for in America, that means it's more valued, which means it can probably buy more across seas. And of course, considering the public, if the public in America is not able to buy it, maybe people across seas can buy it at a better rate. And so it'd be interesting to see the dynamic of, do the top 10 companies in this sector, what proportion is that across borders, whether it's 50-50 or maybe a 70-30. It'd be interesting to see what split that is. We also note that because the government builds stuff, billions or trillions of dollars worth of fixing stuff, we want to keep that in mind. Uh, Further, have all these contracts and revenue been handed out? Now, I could see, and so we're down here at the bottom, I could see that the contracts, maybe a solid portion of that, but definitely the companies wouldn't be able to recognize the revenue until they completed the project. And I'm sure there's a lot more projects to go out in terms of government spending. And right now, I'm just kind of considering the infrastructure plan, which we haven't really touched on. So I'll have to dig into it at some point. And that is one of the questions here off on the right side is, number one, we just want to know, when did interest rates peak? Because I think they have peaked. And when did they start to build? Just to give us a timeline of, number one, are we at the top? How long are we going to stay at that top in terms of interest rates? And, when it starts to pull back, that will impact this sector to some degree. And then we know the longer the government keeps them raised, it's good for government spending with industrials because, again, I believe Biden has some sort of infrastructure plan that's probably trillions, if not definitely in the billions, where he wants to build up infrastructure here. And so we just want to see kind of what the terms are for that. And that, of course, leads into number. So going back to the rates, what are the rates today? Where will it be at year end? And also at the end of 2 or 3 years, I'd be curious to know that if the interest rates are, say, 7% today, that's pretty high for us, but it allows the government to kind of capture this money quicker, hopefully. But in 2 years, is it going to be at 5%, 4%? It'd be interesting to see where it is. Going back to that infrastructure plan, when will Biden's current plan retire or be satisfied? Is there a certain amount of projects that need to be done for the plan to be satisfied? It's done. Or does it just, hey, we're going to do our best within this time frame? Once that time frame is done, you more or less just stop on that point. Again, something I'd like to look into. And if you're more familiar, of course, let me know down below. And then just looking ahead, we want to imagine what the next term cabinet will do in office regarding infrastructure. Is one wanting to continue building more than another, or are they both highly for or against infrastructure? So, if Biden stays in office, we pretty much will know exactly what he wants to do. If another candidate from just another party, what is their stance on this? That'll, of course, impact this sector. We want to look into individual players within the ETF for a winner or two. Also, how far ahead do we feel the market price the sector? Look at the multiples over time. So that's something that hopefully, as we progress through understanding this sector, we will just get a better idea of a lot of these questions. And if you have any insight on these that I'm kind of stuck on at the moment, please let me know down below, and that'd be very helpful for me and anyone else watching this to read those. And I can even star them if someone does leave an answer. If I come up with the answer, I'll do the same. I'll star them so they're up at the top. But that's pretty much all we have here. So just to kind of go back, they're saying there's a lot of momentum in this one. They're rating it a buy. Uh, a lot of earnings per share growth potential in terms of its like second or third, it looks like, in the double digits, but it hasn't seen much of a return yet. I think once we get into it, it'll change. So let's go back to our tracker here just for a minute, regather ourselves. So again, about a month ago, it was trading at 96. We had buy points at 89 to 95. I'll pick a bold marker so that I know that's the ultimate point that I want. And then, of course, we'll have other points that are interesting, not necessarily a buy point, but a point that I would consider buying it at least. Resistance, that might change a little bit. But yeah, let's go into the technicals now. Okay, so XLI, and we'll zoom in a little bit. So last time we looked at them was 531. So that was somewhere in the middle here. I think we said it was, what, 96? So 96. So we caught it in somewhere in this tail region. So it actually was, it was at a good, decent time to buy. We probably should have picked this one up. I'm surprised we didn't. I think the reason I held off is because looking at the uptrend, the long-term uptrend, which is the purple lines, it was only like in the middle as opposed to down here at the bottom, which I realized it doesn't crash to the bottom very often. But if we scale back, it does happen. So again, going back like 15 years here, all the way back into 2011, you can see it hung out at the bottom for a number of years till 2013. Again, came back to the bottom in about 2015 through 2016. Then it stayed above the line until 2018. We saw another crash where we had a couple opportunities during 2018 and 2019. Then the big crash of 2020, which everything fell. And then, of course, it took a little while to build up. So from 2020, we had a lot of opportunities. Of course, that's the past. And then most recently, we did have two chances in 2022. And so now we're in the top. Looking at the past, it might stay in that upper half of our three purple lines. It might stay in that upper half, potentially for a couple years. That's very possible. And that would just mean, I would just pick it up in the middle point. If it touched that middle point, that would be, if I really wanted this, and again, keeping in the back of my mind that this one's only going to grow on average about 6% annually. With that in mind, I probably won't pick it up at this midpoint. I would wait until it touched the bottom. And again, that's just my stock strategy. If you don't want to take as much risk, or you want that slow gradual return, then yeah, this would be, that middle purple line would be more so ideal. And of course that changes. I asked a lot of questions in that last slide to myself and to others, if you're willing to help. And based on some of those answers, that could impact a buy point on this. But again, so 531, we noticed it was at 96, which actually kind of was a buy point. Probably should have picked up at least one share of this. Ever since then, it's been on the up and up, going up about $10. So right off the bat, I'm going to mark this one red, just based on technicals alone. And that's for a couple reasons. And of course, there's definitely a trade-off in marking this one red, or any stock that's reaching all-time highs in red. And that's because I'll try to find one here. Um, this is a great spot. So back here, back in 2020, before the crash, it was at all-time highs right around $80. Then it crashed. Eventually, over time, it reached that $80 and surpassed it. So now, all of a sudden, in November of 2020, and I'll zoom in here, it reached new all-time highs. And what did it do after that? It continued to rally 20 more dollars over the next like 6 months. So that is, I've seen that pattern play out many times where it reaches new all time highs and it just shoots off for another 10, 20, 30%, sometimes more than 30%. And so that could be the case in this one. Uh, Another pattern that I kind of saw with this, and only if I zoom out, it probably is going to be difficult for you to see, but um, kind of whenever it stalls out, let's see, it dips. If it stalls out, I'll look into this a little bit more. But I felt like anytime it would stall out, uh, it would follow with a pretty decent rally, but maybe not. Um, I'll definitely look into it a little bit further. Uh, but going back to like why I'm not interested in buying this one, at least at this point, is number one. I mean, this isn't a dip opportunity to buy. This is more of a, like they said in that one article, this is momentum. So if you're into riding this one, yes, this one could potentially go from 107 to maybe a 130, something like that, and then at 130, somewhere between I would say 125, 135. If this one continues to rally, that's probably when it would stall out. Uh, just kind of basing off of the averages I feel like that I've seen of like 20 to 30% rallies. So that's kind of where that number's coming from. Um, and then of course we had this red resistance line at 103. It tested that one, two, three, four, five times. It just struggled to get over 103. So we noted that on our tracker. And here we finally passed it. We knew we would pass it at one point. I just think it's a little bit too soon. If this would have followed the purple lines and got above that mark, say in first quarter of 2024, that would kind of be in line with expectations. But we're just a little bit too far ahead. Um, so again, yeah, I would need to answer some of the questions that I posed uh, prior to, you know, want to buy it today. That's really what it comes down to. This orange, we can just remove that. That was kind of what I thought it would do. Just kind of chop between the purple lines. Uh, no real order to that. Just an idea of it chopping somewhat upwards, but kind of flat. I'm just going to remove that. So this was a projection box. We thought this would be where it would end at the end of the second quarter. That did not happen. It was way off. We thought it would dip down. It did not do that. It came right here. So we'll just update it to that. I'll hopefully come up with a third quarter projection sooner rather than later. I guess if I had to right now, just since I'm here, I can just throw it out there. Third quarter, let's see. This would be my third quarter projection, somewhere here. And let me make that the same color, like this gray. That's where I think it should be. Doesn't mean it will be there, but based on where it is today, in the short term, I think this one's more likely to pull back as opposed to continue to rally. But like I said, I've seen many companies before. Uh, I imagine ETFs is included in this, but I've seen many stocks, individual companies before reach new all-time highs and then rally for another 20 or 30%. So that is definitely a scenario that could play out with this one. Um, and I'm just don't want to ride that momentum right now. If we go back, uh, I guess here's another point of interest is like, so a little more recently, at one point it had all-time highs at once it peaked out at 102. uh, that was its all-time high around 102. Then it kind of dipped. It's traded flat for a couple months, a couple quarters really. Then all of a sudden it hit 104, new all-time highs, but pulled right back down. So that could potentially be the case here. We had all-time highs at about 105. Here we are at 107. Maybe this will pull back. Kind of 50-50 at this point. So let me just update the tracker and then we'll just close this one out. So XLI was trading at 906 or 96. Now it's at 107. So it's gone up a lot. Buy points for me today would be, let's see, probably 96. I will make 96 a buy point. So I'm just gonna get rid of both the buy points that we had marked out. 96 is one, and I'll make that the bold figure. But I also would, ideally, like the best spot for me would be all the way down to like 89. So that probably got changed a little bit. But we'll make 96 the bold figure. So it's the more interesting point for me. The resistance point, right now it'd be right around 103, 102. So I'll just keep it at 102. We're at 107, so we're way above that. The dates we'll put in today. Average yearly return 6%. That's pretty much been the same, or that is the same. I'm not going to change that. And all I did for that, if you're wondering, is I just took a point like January 1st of 2021, took January 1st of 2022 of this purple uptrend line, and these are all parallel, or at least they should be. And based on the incline, it's 6%, so that's where that came from. 15-year long uptrend. I'm going to remove, or I guess, the two-year consolidation. 2-year consolidation, 40%. I'm going to give the uptrend 70% at this point, and the consolidation, I'll just drop that to 30%. Consolidating between 96 and 103. I'm going to keep that note in here too, just because there is a chance this one could pull back over the next couple weeks. Be very curious to get some of the answers to the questions that I posed to really understand this one more and how it might rally. Yeah, because I guess one last thing that I'm considering is, the government gave out, it had to have given out a bunch of contracts. I'll need to dig into the infrastructure plan, which I don't know how old that is at this point. Probably at least a year, right? Unless it took a while to get voted on. Okay, but I guess that's it. Again, if you have any questions or want to share some insights on your end, feel free to do that. I'd be happy to read them. One last thing, actually. So here's the XLI sector. This is a little bit old couple weeks old, I guess, but I can't imagine much has changed between June 13th and now, July 1st. But these are the top 10 holdings of XLI. Uh, Previously, it was a buy. That's why the ones on the left are green. And we picked out a couple that I might begin to follow. I'd probably replace some of the ones I'm currently tracking, update it with some of these. So I noted Raytheon, Honeywell, and ADP, which is data processing. But any of these ones would be good. Normally, especially with like a new sector, what I would do, or what I do, is I take definitely the number one, uh, probably the number two, which is what I did here, depending on the percentage. If I see one that's making up like 20% of a sector, I'm definitely following that one. These ones, a couple were above four. I'm always going to choose the number one company in the sector. Um, and then I want to pick another one that's in like the top three, top four, depending on the allocation. And then I like to pick one in the middle towards the bottom, between, I guess, 5 and 10. I like to pick one there because it's smaller, more likely to be smaller, and potential to grow. Uh, Whenever we looked at this at the end of May compared to mid-June, nothing really changed in terms of rankings. It looks like these two that I highlighted yellow, they did flip-flop. So General Electric jumped Caterpillar, but only by a small percentage. And in fact, when you add those two together, it's a minor uptick. But it's just interesting to see how they evolve over time. Uh, but yeah, that pretty much wraps this one up. So I'm likely not going to be buying this one. I marked it red for a reason. Um, but yeah, that wraps this up. So please like, subscribe, and I'll see you on the next one. Bye.